I would like to ask Kris Lovejoy to join me here on the panel. Sorry, when the lights good. Yes, thank you so much. Kris Lovejoy is Global Practice Leader for Security and Resilience at Kyndryl. Thank you so much for being with us. And we're moving from financial crime to other forms of crime, cybersecurity related. And that we want to look again at some of the aspects of the implementation of DORA, which we already spoke about a little bit at this conference in the morning. But maybe before we start, Kris, do you want to maybe say a few words about Kyndryl? Because I'm not sure the name is fully known to everybody yet, even though it should be.
Sure. Anybody know what a Kyndryl is? Very few. So we are actually, I think, technically the largest startup in the world. We split from IBM about 2.5 years ago, and we are the services arm. So think of us as IT services, advisory services, as well as managed services for critical infrastructure. So we tend to serve very, very large, complex organizations that are highly regulated. For example, we serve, I think it's about 76% of the banks that are directly supervised by the ECB right now. That just kind of gives you an idea. We're about 80,000 people, and we have a very, very large operation here in Europe. My role is twofold. One, I am responsible for the P&L, that is focused on security and resiliency implementation, capability implementation. And then I also am essentially the CISO for the commercial environment. So think about that environment is our shared infrastructure upon which we are delivering services into critical infrastructure, as well as once we've signed the contract with the customer has a set of obligations, we have a set of obligations. My team looks after assuring that those obligations are being met on both sides.
Thank you very much for that background. What type of trends do you see in the market? And given your role as global, also how does Europe fare compared to some other regions in the world?
So, I think we've been talking a lot about regulation today, so it should come of no surprise to anybody in the room that Europe tends to be more regulated than elsewhere. I have to say, having been in this industry now for going on 30 years, I started my career as a pen tester. I was saying this earlier to somebody, and forgive me, I've been in the industry for so long in so many different roles that I've become very cynical and as well as very pragmatic. There are 3 reasons why people will buy cybersecurity capabilities. 1, compliance. That's the number 1 reason. 2, crisis. They've had some sort of event, like a ransomware event, and they have to pay to do something about it. And 3 is they have a member of the board or C-suite who all of a sudden wakes up and becomes interested in this particular subject. Again, of all of these triggers, compliance is the most important trigger. Now, I have had a love-hate relationship with regulation for a large part of my career. And I think it was because most often regulation was a little bit fuzzy. It got down to the implementation details, and you'd see words like, it needs to be risk-based. Nobody knows what that means in my industry. No one knows how to measure the potentiality of an impact that there's no good actuarial data for. So the positive that I think we have here today is DORA. DORA has had an unspeakably positive impact on the industry. I know that seems very strange for a cybersecurity professional to say, but it is true. And the reason is because it has broken through the barriers, the silos within any given organization. Now, I'm hoping to see NIST 2 go more in the direction of DORA, in so much as there's one little aspect which is missing, which is really on the recovery side. Most security people tend to think of security as being the ability to predict and then to protect the organization from threat, as well as to monitor and respond. But the activity stops at response. It doesn't go to recovery. And one of the issues that we're seeing very practically working with our customers is that when they have a ransomware impact, for example, they are not able to recover their systems. Why are they not able to recover their systems? Because the security person does not speak with the business continuity disaster recovery person. DORA has changed that. It is now requiring organizations to think about approaching cyber risk not as security, but as anything and everything that can impact the digitally enabled organization, including but not limited to cybersecurity. And so therefore, it has been of huge benefit because it is forcing multiple silos of the organization to work together and to harmonize controls around business critical services that they are now obligated to better understand. So that has been a huge positive. And again, NIST 2 is more focused on the cyber security protection piece than it is necessarily on the recovery piece. And again, recovery is very, very, very different.
And maybe just for the audience, in case not clear, NIST is the Network Information Services Security Directive, which is the sister piece of legislation for the non-financial services sector. But I mean, as you're implementing DORA now for your clients, what are you seeing still as challenges? We talked to Verena a bit earlier, and she admitted some pieces of implementing acts are missing. But she implied some leniency by the supervisors around that. But what is kind of still keeping you busy with the implementation of DORA 2 or 3 weeks after it's formally entered into force?
So we have a bit of a hoarding problem within the financial services industry. And so I don't know if anybody's seen that show Hoarders. It's about people that just keep everything in their homes. You know, within financial services, we tend to hoard technology. So if you look at any given financial services institution, they have a very large percentage of their hardware and software, which is technically end of service, end of life. So think about that. The worldwide stat is about 46%. Here in Europe, it's much less, but it's it's a significant percentage. It's over 20%. Now, the problem with end-of-life, end-of-service technology is it can't be secured. It really can't be made resilient. It's just the vendors no longer support the technology. And so one of the things that we're finding as we're going through the stress tests is that the organizations have a hodgepodge of technologies, some cloud, some on-prem, some they didn't even know that existed that was on the network. And when you actually run the tests and you start from the end user and you go all the way back into the disaster recovery environment, what you find is the mapping between the application and the underlying infrastructure and all the other stuff that goes into that business service hasn't necessarily been well documented. And even when it has been well documented, what you find is that some of the components of those business services are not capable of enabling you to meet your RPO, your recovery point objective. So what we're finding as we're doing these stress tests is organizations will say, my RPO is 14 hours. I want to be up and running in 14 hours. What we're finding very often is that it's 32 days, 40 days. And sometimes the reason is it's very simple. They have not vaulted, for instance, we talked about the digital credentials. Oftentimes organizations will vault the data, they don't vault the digital credentials. So maybe you can get the data back, but nobody can get access to it. Or maybe you can get the data back, but you can't put it into a database configuration that enables a human being to see it. Or maybe the network connections between the site where you want to recover and your disaster recovery doesn't allow you to process enough data. So it's all very, very, very practical, but when you rip it apart, it has to do with the organic nature of our businesses and the fact that we've been thinking, again, I use the word silos, we've been thinking a lot in silos within our IT organizations. We haven't necessarily yet come to grips with the fact that we have business services that exist in more than paper. And a lot of our business services today are on paper. So we think we know how things are going to be recovered, but the reality of how it works is not the case.
Which is interesting. I'm not sure whether you were there when we discussed FIDE, which is the sharing of customer data, but in light of what you're describing, that's quite a scary thought because we don't have an integrated infrastructure to start with. But looking then at the experience you've had with DORA, what do you think policymakers could or should do to make your life easier? What could supervisors do to facilitate this process?
I think where DORA has been very good is DORA has been more prescriptive, and I know that that might sound contrary to what a vendor would tend to say, but I think it's been very helpful. I think the definitions have been very helpful. I think the RTS, the fact that the drafts came out, we were able to work with them was very useful. The fact that they're very practical has been very useful. Obviously, the implementation details are yet to, there's a lot we're going to run into as we go through this. I think some more detail around the obligation for organizations to recover the business service. I know this seems trite, but again, going back to what is a business service? Is the business service just the data, which is what some banks are considering it as? Or is it all of the infrastructure that enables that business service to actually function? There is a distinction. And so a bit more definition around those use cases of what constitutes effective recovery and what doesn't, I think would be really helpful for the marketplace. The other thing is, this is another piece, I'm going to speak as a third-party provider. Now, obviously, CTTPs have not yet been identified. We're assuming if we're not going to be the first go-around, we'll be the second. So we are acting as if we are a CTTP here. There are some practical challenges for us and for our customers when it comes to software and the supply chain. This, I don't think we in the world have come to grips with how hard this is going to be for us. Large companies, the Microsofts, the others, they have very expensive, and I'm not, I'm not going to render an opinion on any given organization's capacity to, build software. All I know is they have big teams, they spend a lot of money. They have a set of requirements as far as the secure development lifecycle process works. The problem in the industry is not the big ones. The problem in the industry is the smaller organizations, the ones that we want to be innovative, the ones that we want to build new capability for us. They cannot afford good coding practices because they don't have the skill. They don't have the money to buy the tools. So the one thing I would say is just be cognizant of, I've been hearing and reflecting on how much we've been talking not only about regulation, but growth and innovation. Do not inadvertently stifle innovation by creating an onus on these third-party providers, on the smaller organizations who can't afford to code according to the rigorous specifications that we all want. So there may have to be some sort of public funding or support for tools and technologies, best practices, lab environments, testing environments that allow the smaller vendors, the startups, to actually participate in this digital economy. Otherwise, what you're inadvertently going to be doing with the supply chain requirements is going to be creating an us and them scenario where only the larger organizations can actually afford to get certified or registered to produce software for the critical infrastructure industries. So just something to be thoughtful of.
That's a very, very interesting observation, because the whole idea of DORA was to effectively make sure that the entire chain is covered, but then you impact all the smaller companies in that process.
Yeah, and they're the ones that are, by the way, I was laughing the other with somebody else saying UX, if you hear user experience, 100% user experience is being built by, 3 guys in a garage somewhere. And, just keep in mind that they may be really good at the look and feel, but security not so much. And when we monitor, we're monitoring events today across our customer base, just percentages. About 20% of all outages are caused by cybersecurity issues. Another 20% is network. Another 10% is data center outages. The rest are hardware, software outages. Of those hardware, software outages, about half are associated with code failures where there is never a root cause. It just failed. It was bad code. That is a huge percentage of outages in our financial services industry that really, again, good coding practices would help in this particular area, but we don't realize how pervasive the issue is.
Thank you so much for this very fascinating set of thoughts and bringing it back to competitiveness. Thanks so much for being with us, Kris.
Thank you.
Thank you.
Thank you.